To watch winners and losers, talk winners and losers, and watch the markets with financial expert Rob Black, who's joining us this morning. Rob, it's weird. I noticed oil prices were creeping back towards $100 a barrel, and the markets started negative, but now they seem to have turned positive for investors, kind of just like hoping beyond hope that this peace deal, this ceasefire, will hang on.
I think that's exactly right. And yesterday we had a big move. All three major markets, the S&P, the NASDAQ, and the Dow Jones Industrial Average, all had 2+% up. So this morning we had a little bit of profit taking, but also a little bit of this peace deal doesn't look like it's going to hold, or maybe it will, or maybe it won't. So it's frustrating because it's market noise. We're 3% from the all-time highs, James. 3%. There's a war going on, and we're 3%. So I wouldn't freak out. With that said, I would say there's a lot of short-term risks. And I think that's something people should start thinking about, of like, how much risk is in my portfolio that I'm comfortable with. For a 60-year-old man, it's totally different than for a 25-year-old person.
Well, I mean, investments aside, a lot of kitchen table issues people are dealing with now, like gas, is so much more expensive than it used to be. The national average, I think, now topping $4.16 a gallon. We have Will live out there this morning talking about maybe the possibility of prices starting to come down at some point. But, I mean, that's what everybody's hoping for. What do you think?
Yeah, I almost want to say knock on wood right now, but this weekend we could see prices start to drift a couple pennies lower. So maybe we've peaked again if this peace deal holds. Gas at $4.16. It's up above. It was below $3 before the war. So, but prices should start coming down. They're going to come down like a feather. They went up in like a rocket. They're going to come down very, very slow. Well, James.
Yeah, and not only that, but jet fuel is going up. We just did a story earlier this week about airlines compensating by increasing the fee for checked bags. I mean, you got summer travel season coming up. People are trying to save money on flights, too. It's just hard.
Yeah, try to save money if you can. The summer may be out of reach because you're running out of time. For summer, I would try to fly June, mid-June, or late August. I would stay away from July. Those times are going to be crazy, busy, plus expensive. Bag fees, fuel surcharges, cut flights. A lot of airlines are cutting the cheaper flights, which were off-peak. So your only option is to go in the peak times. So round-trip international is up 29%, and that's even before the war started, James. So it's even up even more. Domestic, it's similar, but not at 29%. So the best time to buy domestically is 23 to 51 days. I've been in fights that probably could have led to divorce with my spouse. Like, you can't book in the last 20 days. Like, I'm a money guy. You can't do that to me. Internationally, you want to book 49 days or more before your flight. So again, you're probably out for the summer, unless you're thinking late August at this point in time. Friday's the cheapest day to fly. I've found that surprising. Thursday's cheap. Tuesday's cheap. Sunday's expensive because everyone's coming home from the weekend. Monday's expensive because, business people are going on their trips on Mondays. So that's what I got for you. I'd use like a kayak or a fare compare to see, what dates are cheaper and what airports are cheaper. Because like if you're going to LA, there's 4 airports right there. Yeah. And another, small tip is that, consider a one-way with Southwest and coming back with US Air or American Airlines. Right. So you get the idea. There's ways to cut hundreds of dollars. It's just not click and go with what you first see.
Right. Do a little digging, a little investigating. Oh, it's a lot to think about. I wouldn't blame anybody if they feel like they need a drink right now, but even that business is going down too, apparently.
Nice transition. Yeah, it went up a lot during COVID, and ever since then it's been falling. And it used to be the most consistent category on Wall Street. People are going to drink a little bit more every year. So demand for beer is down 5% recently. Wine's down 6%. Spirits are a little different because there's so many different types. Whether, you may see vodka shoot up in demand, whereas you'll see tequila fall. Non-alcoholic categories are up 25%. I went to the grocery store yesterday, and I couldn't believe how much short store shelf space was being dedicated to non-alcoholic. It's a major category now. So this is both economic and cultural, James. So for economics, the high cost of alcohol, a 12-pack's $15, or a 6-pack is $15 now sometimes. That's easy to cut and say, I just say $15. For the broader lifestyle, the change to healthier plus alternatives like marijuana, it's just a trend that alcohol is getting left behind slowly. Also, like my sleep app on my watch tells me like, hey, you should consider cutting alcohol out because you woke up 4 times last night. So I want better sleep. I
Yeah.
want better mental clarity. So there's so much going on, but none of it's in the favor of alcohol companies.
Oh, interesting, that trend. One worth watching. Rob, thank you. As always, we're going to chat with Rob again on Monday. So get your questions and comments in now. You've got his contact information there at the bottom of the screen. Have a great weekend, Rob. We'll see you next week.